Hey everybody, welcome back to the channel. I'm Doug the Retirement Guy, and today we're going to talk about the hottest thing going, and that is the SpaceX IPO. This will change your Nasdaq ETF fund without you even knowing it. Never thought of this one, did some research, started digging into it, getting excited about the SpaceX launch, and I said, hold your horses. I found out so much more information that I need to share with you about what's going to happen here and all the new rules that were changed, all because of what SpaceX is doing. Today, we're going to break it down. We're going to give you all the information so you can make a true hardcore decision and prepare for the future of your NASDAQ ETF and your future into SpaceX. Let's get into today's video.
Well, right off the bat, I do this. Past performances does not guarantee future results. The information provided in this video is for educational and informational purposes only. If you are looking to do financial advice, always contact a financial advisor. As I am not a financial advisor, I am just someone who has been heavily into all of the retirements and working with the money.
So let's start off with the big elephant in the room, and that is going to be the SpaceX IPO. Now, this seriously is going to launch and be the largest initial public offering in history. There will be nothing even close to it. So they're expecting about $1.75 trillion valuation of SpaceX as a whole. Now, SpaceX is preparing to launch the largest initial public offering in financial history, priced at $135 per share. And it's to raise an unprecedented $75 billion. The listing will dwarf all the previous records that were out there. And in 2019 was the last time we ever had the largest ever. So the targeted valuation will be 1.75 trillion, which will put them in the top 10 of the U.S. publicly traded companies day one. Okay? They're going to raise about $75 billion, which is twice over what the Saudi did. And the trailing 2025 revenue is that $18.67 billion. So it's going to be, they're pricing this thing out at 93 times the price of shares. So realistically, it's untraditional IPO where banks test the price range, the institution buyers. SpaceX is adopting a rigid take it or leave it strategy. This unconventional pricing reflects the carousel, the cult-liking, demand-driven Elon Musk private space powerhouse into the marketplace. Why does this really matter? It's actually in the little fine print that I just went over. And that is, they are going to be one of the 10 top publicly traded companies. And who does Nasdaq use? And let's use the wording. It's Nasdaq 100, the top 100 companies. And if SpaceX is already in the top 10, what does that mean? Now, here's the thing that's happening. When Tesla came out in 2020, it was not open to ETF funds. They had to wait too long to get in the funds. Because the fund was not open, they had to wait all the way until December of 2020 to put that into their portfolios. By that time, the price had already had massive run-ups. It was over 743% increase in the price of that initial price offering to where the ETFs could actually buy into. That's huge. And they don't want that. They want that be able to get in there to make the money. Okay? So what has happened? What have we changed throughout this whole thing? And there was a ruling that came out. It was the fast entry. The rules have changed. Now, what are these rules? The fast entry rules have changed. The 15 days fast track rule. Traditionally, index providers were enforced a seasoning period of several months to a full year to protect that massive fund from the initial market volatility. However, in 2026, Nasdaq introduced a fast entry rule. Under these guidelines, newly listed companies ranked in the top 40 by market cap can join the Nasdaq 100 just after 15 trading days. That triggers a massive automated buying mandate for index funds. Think about that. If I'm going to give you one of the top 10 companies in the public, and your index says it buys the top 100, and it's automatic, what's going to happen? It's going to force every one of the Nasdaq 100 funds buying into SpaceX. And they're going to do it after 15 days of trading. Okay, so they're going to be making huge buys in that 15-day period. So if you own a Nasdaq ETF fund like QQQ, okay, which is the actual, it's an actual ETF fund that you have, you could have SpaceX in your portfolio without even buying a single share. So I know a lot of people are out there like, oh my God, I got to get this. This is going to be my next big future. Well, Nasdaq, the ETF QQQ, invests in the top 100 non-financial companies on Nasdaq. It holds companies like Apple, Microsoft, Google, Amazon, Meta, Nvidia. Well, now it's going to include SpaceX when SpaceX goes public, and it adds to the Nasdaq index. Okay? So that's a good positive thing that we're going to get SpaceX. But you don't have to rush out and buy SpaceX shares. You're already going to own it in your QQQ, which means all the ones after that, QQQI, QQQM, anyone who has a index-related ETF fund to a Nasdaq fund will be a part of that. Now, the float illustration, what you actually own. The headlines are going to scream that SpaceX is instantly entering in the index as the top 10 heavyweight. The reality is much more of a nuisance, and it's really driven totally. On day one, SpaceX won't sit at 4% plus weight. Instead, it's going to trade closer to a 0.5 to 1% weight in the Nasdaq 100. Okay? So I'll explain that one again. On most funds, okay, where they put it, where they're going to rank it, how much they're going to have, what they're going to sell, the Nasdaq 100 will put this SpaceX at, normally at about 4% of its portfolio. Okay? But what's going to happen is they're actually going to close it tighter and be at 0.5% to 1% weight of the Nasdaq 100, aligning it with the size of Netflix or Qualcomm. The major weight companies, not by total market cap, but free float. And you ask, what is free float? The shares are actually available to the publicly trading. Because SpaceX is listing only a tiny sliver of itself. Its initial public float is estimated to be between 3 to 5% of the company. Okay, which means 45 to 100 billion dollars is what they're going to put out there. So they're going to evaluate this company at 1.7 trillion, but they're only going to go out to generate between 45 to 100 billion dollars by that 3 to 5% portion of the company. The 97% is going to stay in-house. Okay? There's going to be staying in-house and causing this. So what we're doing is we're fighting over a sliver at this point in time. Now, the slow motion buying wave of 2026. SpaceX corporate structure allows insiders and early employers to list and sell shares earlier than traditional locked up schedules. So, as these insiders sell over the coming months, the public float expands because the index weight adjusts upwards automatically. So, the more shares that get out there, the more the Nasdaq funds will have to buy. So the index funds will be forced to repeatedly buy more and more of the SpaceX shares, month after month. The result, it's a continuous passive capital drain flowing directly into a pre-revenue high beta space stock. Layman's terms, the more shares they get out there, the more that go on the market, the more the Nasdaq is going to have to buy, and they're going to have to sell off other pieces and keep readjusting because they got to get this back in line to where it needs to be. So you've kind of lost a little bit of the drive of driving that marketplace. So it's a big challenge that's going to be out there. Now, the overlap trap. This is the one that really starts to bother me here. False diversification. The 5 costume problems that we're going to be facing here. You might believe in your portfolio is safe and spread out because you own several different index funds, like the core S&P 500, VOO and SPY. Those are core S&P 500 funds. The tech growth, QQQ, is that Nasdaq 100. Specialized tech, VGT, XLK. And then we start looking at the AI and the semiconductors. In reality, these are often the same top heavy bets wearing different wrappers. When SpaceX and soon OpenAI and Anthropic enter into these indexes, your overlap becomes heavily concentrated. This is what we're going to call the mega cap wave. SpaceX is just the opening act. The 2 largest AI powerhouses are preparing to list. OpenAI is approaching the public market under the same fast entry rules. Now, I know I'm saying it wrong, but Anthropic is expected to list later in the year, furthering the concentrating possessive capital. Combined, these 3 listings will add close to $4 trillion in market cap. Okay, so you're going to have these companies doing this, following the SpaceX program, and we're going to get them into the S&P 500, the Nasdaq 100, will be in special tech, will be in AI. You have to understand what funds you're using and what funds you want to be into to know if you're getting massive overlap. You know, I show this in a lot of different videos when we break down certain stocks and we show you the holdings. And I've actually been asked a couple of times of why do you show the holdings? Because you got to know what you're buying into. And this thing right here is doing it. This is a prime example of what we're talking about. If I'm sitting here, and I'm going to use a couple different funds off the top of my head, SPYI and QQQI. They're into the S&P 500 and Nasdaq 100. 2 separate indexes, right? Both of them have NVIDIA. Both of them have Apple. Both of them have continue on. Now, S&P 500 is more driven, while the Nasdaq is on that tech side. But they have a lot of the same apples for apples. So we got to make sure we're watching where these go, what funds pick them up, so that we have and continue our diversification. So surviving what we call the landing, the action plan. Now, Saudi Aramco warning. In 2019, Saudi went public at a record-breaking 1.7 trillion valuation. Years later, the price remained flat while the rest of the market surged ahead. Now, it's a great company, and it can be a terrible investment if you buy or pay too much of that fund. So what I'm saying here is if you buy way too much or at the wrong time, is that I always call it that FOMO, and we'll talk about it here real quickly, is that FOMO, I'm missing out, I'm missing out, is like the old days back when we had, the Apple, or we had Microsoft, and all these people were like, oh, now I have a fear of missing out of that. That was the thing that could have set me up for long-term retirement. Start with your plan, work your plan, follow your plan across the board. Checking your overlap, audit your portfolio. If you have multiple growth tech and broad market ETFs, SpaceX exposure is stacking up rapidly. So you want to look. We may have to change some of our popular funds just because we're getting so much overlapping of the same funds over and over. Number two, the discipline over FOMO. Let the initial hype cool. Let SpaceX report real earnings. Figure out before deciding the direct retail allocation. Now, some of this stuff is going to sound like, wait, man, this is way over my head. Well, honestly, I can see people, and I can see this all the time, people jumping in, just buy because it's going to go forever. You know what? I didn't get where I was at by buying the hottest, newest stock. I wasn't the one who bought the Microsoft. I didn't buy the Apple and sitting here. Would I have loved to? Probably. Would I have loved, have that in my portfolio? Sure. But I built a portfolio that pays me and works accordingly without having to fear of missing out on SpaceX or being that next big Bitcoin type situation. Understand your ETF rules. Recognize the index is rule based. If exchange list rule changes, your systematic exposure changes automatically. So what am I telling you to do? Just watch. Watch what's going to go on. I expect this thing to rocket. I think the Nasdaq funds are going to go crazy. I think we're going to pull out of this come the 12th, is we're going to make up for what we lost here last Friday, and it's going to tremendously fly forward, all because of the excitement over this. And we're going to sit back and watch it because our funds are already well prepared. Then we're going to make decisions, should we check how much overlay we're getting? And we're not going to fear about missing out, but we're going to understand what our ETF rules are moving forward. So guys, I hope you find this information helpful. It's going to be an exciting week of watching the SpaceX join into it. And then 15 days later, what's going to happen with all our ETF funds? How are they going to handle this? What price they're going to buy in at, and where we're going from there. If you like what we're doing, please hit that like button and leave a comment down below. Are you going to be one of those wanting to buy up first day in, be the first winner of a SpaceX stock, or are you going to be, sitting back watching with your popcorn? Let me know in the comments below. I'd love to hear from you.
Thank you for watching.